August jobs coming in below estimates and the unemployment report ticking down to 4.2%. Join us right now to talk about what the Fed is likely to take away from this as investors look towards, of course, this month's FOMC meeting. Former Atlanta Fed President Dennis Lockhart, he's now a professor at Georgia Tech. Still feels a little bit like a jump ball, Dennis. So, if you were on the court, what would you do?
I'd probably go with 25 because I think this report is consistent with their basic working narrative that the labor markets, the employment markets are slowing, but not falling off a cliff. So I would favor 25. I think that will be the point of debate in the meeting. Really, there's no question that they're resolved to cut.
When you look at some of the revisions, 86,000 jobs off the table that we thought were on the table, how detrimental is that? How much does that go into the thinking?
Well, it certainly suggests to me that the first estimates that we get at the first Friday, in this case, first Friday of every month, are pretty substantially off what they settle on after revisions, and that suggests a weaker labor market than first impressions. So again, I think that will feed the debate in the committee about whether there is a strong enough rationale for going with 50 instead of 25.
Do you therefore think that even today's number is off?
I was a little bit surprised by the revisions, frankly, and I was watching Steve as he was making the report earlier, and he too, I think, was a little bit startled by some of the revisions. It suggests that maybe the underlying weakness is a little stronger than the committee believes, but they're also, I should point out, the Beige book this week, I think, gives you a sense of sort of ground level soundings that the presidents are getting, and they too suggested that we're slowing down in terms of
is there an argument, though, Dennis, if you know that the Fed is going to have to not just cut rates in September, but likely cut rates in November and December, if you know directionally the direction of travel here, is there any value or benefit to ripping the Band-Aid a little earlier? Meaning doing 50 basis points in September.
Meaning doing 50.
Yeah.
It's sort of a down payment, but it does suggest to some extent that they're catching up, and I don't think they particularly want to signal that because I'm not sure they believe that they're in a catch-up mode. So 50 would give them a bit more optionality around November, which is going to be an interesting meeting just because it starts the day after the election, and who knows what's going on in our society on the day after the election this year. So 50 would give them some optionality to be a little more tactical in the next move, which could be November or December.
Well, so let me ask you, I know we always say politics doesn't enter this, but assuming that this meeting's going to, the November meeting happens right after the election, not to say that politics is going to enter it, but politics will enter that meeting insofar as you're going to have to make some kind of judgment calls about what may happen next, no?
Well, what you're suggesting is that they would divert from being data dependent, but they're going to have to look around and see if there are any shock potential things going on.
Right.
And if there are, that might give them pause at that meeting to just stand back and let things settle out and look forward to the December meeting, which isn't the December meeting comes pretty quickly after the November meeting.
Right.
So it's not a long interval like we had between July and September.